Hi, do you want to become a profitable trader? I'm CA Rudramurthy, author, trader, and trainer, welcoming you to Easy Money Show. Today, if you see Nifty closed very flat, about 22 points up at 15,200, whereas Bank Nifty outperformed today and it closed at 34,950, up 336 points. If you see market today, was hugely volatile, but it was within the range. From yesterday to today, that is from Friday market to today's market, you might see a flat close, but then one has to see that today we tested even levels closer to 15,250, and even Bank Nifty moved violently to levels way above 35,000 before it cooled back again in the last half an hour. If you see the FII data, today FII is bought to the extent of 585 crore, but DIIs were sellers, they have sold to the extent of 707 crore. And today, Pidilite Industry, one of the stocks recommended in your Easy Money show, was up 4.5% just for the day, and forget the return of 4.5% just for the day, and it was also available in F&O just with even 2-3 times of leverage with 20% margin on capital. The returns made was phenomenal. 3 days before last week I was recommending you Pidlite Industry and F&O. Even if you would have just bought one lot on your capital, the returns made would have been at least 20%. Yes, that's the return on your capital invested, is what you would have made just even for a lot on futures if you would have taken position in Pidlite Industry. Pidlite crossed 1 lakh crore market capitalization today, and I'll also be teaching today to you what is price earning ratio or PE ratio, how it has to be practically used or effectively used in order to build a good portfolio. And I always say trading is done to create profits or richness, but investing is what creates bigger wealth. And these are not statements of Rudramurthy, the great guru of Rakesh Junjunwala, the Indian Warren Buffett. Rakesh Junjunwala's guru, Radhakishan Damani, says only 5% of my total net worth today, he says, is made through trading. 95% is made through investing. I repeat, Radhakishan Damani, the guru of Rakesh Junjunwala, says only 5% of my total net worth today is made through trading. 95% is done through investing. But the most important point here is, but the money what he made through investing, 95% of his wealth what he made through investing, for that the capital came through trading. That means he used to trade, make profits, and that profits he used to invest in long-term stocks, which has given him phenomenal returns and wealth. He was not born in a golden spoon, or he was not given by his father or grandfather 1 lakh or 1 crore or 10 crore and told you go and invest for long term in stock market. The same story applies to all successful traders and investors. You have to trade to create short term profit, and the capital required for making long term investing profits is done through trading, whereas the long term wealth is created through investing. And fantastic stocks like Pidlite Industry today crossed 1 lakh crore market capitalization. And just 2-3 days back, when I recommended you last week Pidlite Industry in your Easy Money show, from there to now stock is up over 5%. And don't think just 5% for 3-4 trading session. In future, even if you would have taken one lot, you would have taken a capital of, let's say, about 1.5 lakh to 2 lakh. Just with even one lot, you would have made a return today of over 15 to 20% on your capital. And this is a superb return for a period of less than 1 week. And we are not talking story or history or what had happened if you would have invested last week. I'm only talking on the stock which was recommended in your Easy Money show before this move happened in Pidlite Industry. And these are just told to tell you money can be made through stock market. but it requires the right stock selection, the right risk management, right entry, right target, right stop loss. You can't be right on all the stocks what you trade. So stop loss is important, risk management is important, but then even if you cannot be right on all the stocks what you select or trade, you can make money overall. Making money overall is more important than being right only in social media. And let me also tell you, Pidlite industry, which gave you that phenomenal return from last week to today, one lot of future would have given you, as I told, 15-20% return. But if you don't know rightly to trade in futures and options, I see 99% of people losing money there overall. So it is very important to trade with proper understanding. And now people ask me this question: is valuation expensive even for investing in stocks like Pidlite industry? Look at even a lot of FMCG stocks. Look at Nestle. Look at even Hindustan Unilever. Look at Dabur. Or why all that? Look at even stocks like Bata India. I remember it was at 300 rupees when I was recommending Bata India to people, and today the stock has given 4 times, 5 times phenomenal return. But then one has to understand, picking stocks for long term investing really requires skills. Let me teach you today what is PE ratio or price earning ratio. Very simple. Price earning ratio, if you see the formula, it is market price per share divided by earning per share. We simply say it as MPS divided by EPS. What do you mean by this? Very simple. Let us say, for example, I'm saying if Infosys share is currently available for you at, let us say, this is just an example, currently Infosys is available to you at, let us say, 1500 rupees, and I'll say Infosys is giving you an EPS, earning per share, of, let us say, example again, 100 rupees. So the stock is trading at 1500 and it is giving you an EPS of 100 rupees. So 1500 divided by 100, MPS, market price per share, that is 1500 divided by earning per share, example I'm saying 100 rupee. If you do this, what you get as answer is 1500 divided by 100, which is equal to 15 times. That means Infosys, for every 1 rupee of earning, the share price is trading at 15 rupees. So that means it is trading 15 times its earnings. So for an earning of 100 rupee, the stock is trading at 1500 rupee. Now, the simple rule of P ratio is stocks which are having lower PE multiple is considered to be cheap in valuation. That means it is available for a better price for you to buy because it is priced at a lower time than its competitor. But when you do PE ratio, please understand you have to always compare apple with apple and not apple with orange. And lot more to learn into these terms, and never be under an impression that lower the PE ratio better it is, because I can see stocks with as high PE multiple as 80 times, 70 times, 90 times. Look at Pidlite industry. It is trading at 90 times PE multiple, but still the stock is moving up. Why? This requires more deeper understanding of market, and it is not stocks with lower PE multiple is what you have to buy. You have to see something called as growth. If a company is having superb growth in its earnings, then people would love to pay a higher PE multiple for that higher growth. So we have to see something called as peg ratio. I'm not talking about the peg what normally you understand. Here the peg ratio is all to do with price earnings to growth ratio. So if a company is growing at a higher pace, then paying a higher PE multiple is worth. So more deeper understanding of all this is required, which we provide in lot of our courses. For me, Zero to Millionaire ZTM program, a very basic foundation program what I conduct, gives you lot of learning in terms of a very strong market fundamental and technical, and more than anything, a strong foundation of the entire bird's eye view of market. This is where we make difference in terms of picking the right stocks, understanding the market properly and staying in the elite group of just around 5% of people generally who make the money of 95% of people who keep losing money. I'm sure in today's easy money show you have understood what is PE ratio. It is MPS, market price per share, divided by earning per share. Generally the belief is PE lower, better it is in terms of valuation. But however, if you go to practical and deeper understanding, stocks like Pidlite, even though trading at 90 time PE multiple, is a fantastic stock because it is giving you earning and the growth in earning is far better. And if you have visibility of that in a particular stock, we don't mind paying a higher PE multiple. But then you should understand when that earnings growth peaks out, that is the time when we consider selling the stock too. And I always say, people ask me in question down in the feedback, some of them have asked me, what do you tell about Equitas? How is it good for investing or not? I say, why Equitas when you have Bajaj Finance? People ask me, what about Yes Bank? Why do you want to buy Yes Bank when you have stocks like HDFC Bank? Forget even HDFC Bank. Repeatedly, I told two PSU stocks which can do great and which should be part of each and everyone's long-term portfolio. Buying on every dips is SBI as well as Canara Bank. Look at Canara Bank, the performance what it has given when the whole world is only talking about SBI. So people have to understand it is all the stock pickers who makes a tremendous amount of wealth in market, and people who keep buying shit keep losing money in market, and they stay in 95% of that group of people who keep paying their losses as profits to the elite 5% of group of people who make tremendous money. And I always keep telling, for me time is always too much and I have so much to share with you, whereas the time what I have is too little. I always say, if the tank is full, water keeps flowing from the tap. If the tank is empty, only air will come from the tap. I'm sure you people understand the difference and you know the power of easy money. Thanks for watching. Do share this in social media everywhere possible so that you join hands with me to spread the right financial literacy. And during live market hours, I'm giving my market views calls in only my Twitter handle. I am Rudramurthy, which I've given in the description below. Do follow me in Twitter so that you get live market calls for free and you can understand even during live market hours what will be the next possible move, and all these updates coming to you in my Twitter channel. I am Rudramurthy, given down in the description. Give your comments, give your feedback on the learning, and give what more you want with your questions and feedback in the comment section down. Thank you for watching, and we will come with more and more in our Easy Money show. Take care. Bye bye.